McGrath with NakedTrader.com. Well, we've seen a little activity here this morning. The market actually, with 3-month LIBOR up a little bit. We walked in and we've, since the open, have come down and made new lows. Firmed up just a touch, but the market still trades a little bit heavy. And we've been watching this red March contract, and the 10 area, 11 is very important. Remember, the weekly pivot was 11, and that's been a level of resistance in the past. Now, you had two highs at 18. We've just come down, made a new low, 09. Yes, 09 is correct. So we got to see if we can get back above 11, I think. If we continue to struggle down here on the lows, I would look for another trade down to that 06 area. Now, if we start to take out 06 in red March, believe that you'd stop yourself out of any position. Look for another trade down to 03, 01, 99 and a half. Now, I know Tony sent out yesterday possible double top in the 10-year. You actually do have the double top, but you wouldn't want to play that until we get below this 120 even area. That's where the trend line comes in. Now, remember, 119.28 and a half was where the trend line came in last week. We got below it to 28, and the market rallied off of that line. You could have made some nice levels, nice money scalping that level. So keep an eye on this 120.01 even area. It's where the trend line comes in, and we have touched on that like 5 times, and it's held for the most part. You have come below it and then the market has bounced back up, and it's been a nice scalping area. So it's a level that I want to keep an eye on. Now, if we started to close below 120 even, then you're going to change your opinion. You have the double top. You can measure that objective. It's a pretty good substantial move lower. So let's definitely want to watch that area. I'd buy it the first time down there, looking to scalp off of it. But closing below 120 even will be negative for the 10-year note. So that will drag everything down. Now, if you look at the front end of the Eurodollars, the 3-month LIBOR moving up. They are overbought. Now, if you move in, we've seen a lot of selling. March 96 calls and 96 straddle this morning. 6s have traded in the calls, 9.5s in the straddle. So people are looking for the March to eke back down a little bit, selling volatility there. We have seen some other vol selling in D's. D straddle has traded a couple thousand times. Paper is selling that. D's 93 calls traded 20,000 times. Paper was selling in the money call at 18. So we have seen selling, calls selling. We did see the February 95.6 put spread traded 3/4 of a tick 10,000 times. Paper sold that. So you're not looking for a whole lot in the March contract for Feb expiration. A lot of stuff going on today. We'll see if this market can have any follow through on the downside. Otherwise, you're going to bounce back up. Now, one thing I like the greens, and I still think on this down move, you'd look at buying some out of the money calls in the green March or green June. You can pick up some inexpensive calls on the upside, and I think the greens are the ones that you'd want to be long those going forward. So maybe look for a little bit more downside there, look at some out of the money calls. It's Jack McGrath with NakedTrader.com. Have a good day. Thank you.